Look, saving your first $10,000 is absolute unadulterated hell. It feels painfully slow, completely unrewarding, and honestly, most people just throw in the towel long before they ever get close. You sacrifice your weekends. You skip dinners with friends. You say no to the small luxuries of life. And after months of painful discipline, you check your bank account only to see a tiny, unimpressive balance. It feels like trying to empty an ocean with a teaspoon. But here is the secret that the modern banking system never explicitly tells you. $10,000 isn't just a random milestone or an arbitrary vanity metric. It is the exact mathematical threshold where the fundamental mechanics of money completely flip in your favor. Before this specific number, you are working entirely for money, trading your physical time, energy, and sanity for a paycheck. But after you cross this line, money is mathematically forced to start working for you. In this video, we are going to break down the exact physics of the first $10,000, why reaching this milestone creates an unbreakable psychological shield, and how you can strategically navigate the hidden financial traps of 2026 to reach it faster than 99% of the population. Almost every guru on the internet tells you to start by saving a basic $1,000 emergency fund. And while that sounds like solid advice for absolute beginners, let's be brutally honest with each other. In today's economy, $1,000 is an absolute joke. A single unexpected transmission failure on your car, a sudden dental emergency, or losing just one key client can wipe out $1,000 in less than 5 seconds. When your total liquid net worth sits at $1,000, you are still living in constant high cortisol survival mode. You are essentially living one bad afternoon away from total financial collapse. Every single unexpected real-world expense completely resets your progress back to square one. This grueling zone, the space between having $1,000 and reaching $1,000, is what I call the financial valley of death. It is where 90% of ambitious people give up on their financial goals. They grind for months, make sacrifices, and the moment they build a small cushion, life hits them with an expense that drains it all. They assume the game is rigged, so they stop trying and revert back to living paycheck to paycheck. But the tragedy is that they quit right before the momentum shifts. When you finally cross the $10,000 mark, a massive psychological transformation occurs inside your brain. For the first time in your adult life, you prove to yourself that you possess elite levels of delayed gratification, a skill that less than 5% of modern society actually has. Having $10,000 sitting securely in liquid reserves gives you what legendary investors refer to as micro-scale fuck you money. Think about what that actually means in your day-to-day life. If your boss becomes toxic or demands that you work uncompensated overtime under threat of termination, you no longer have to bow down out of sheer desperation. You don't have to swallow disrespect just to keep food on the table next week. If a major home repair pops up, you don't have to put it on a high-interest credit card at 24% annual interest that buries you in compounding debt. That peace of mind actively removes chronic financial anxiety from your central nervous system. When you are no longer operating in fight-or-flight mode over daily expenses, your brain frees up cognitive bandwidth. You can finally step back, think strategically, evaluate long-term opportunities, make calculated career pivots, and negotiate from a position of absolute strength rather than weakness. Let's look at the cold, hard mathematics of wealth building. Because unlike financial influencers, math never lies. If you have $1,000 invested and achieve a respectable 8% annual return, you earn $80 over an entire year. That breaks down to roughly $6.60 a month. It feels utterly pointless, doesn't it? You can't even buy a single decent meal with that monthly yield, so your brain subconsciously tells you that saving is a waste of effort. However, when you invest $10,000 at that exact same 8% return, you generate $800 a year without breaking a sweat or trading a single hour of your physical labor. Suddenly, your capital is paying for your utility bills, your internet subscription, or your daily coffee completely on autopilot. This is the exact moment where the compound interest engine shifts from theoretical physics into observable reality. Here is the mind-blowing part. Accumulating your second $10,000 takes almost half the time and effort of your first $10,000. Why? Because you are no longer pulling the entire weight alone. Your original $10,000 is now actively pushing the cart alongside you, generating its own income that feeds directly back into the engine. The true value of having $10,000 isn't just the interest you earn in a high-yield account. It is what institutional investors call opportunity capital. When economic downturns hit, when inflation surges, or when financial markets crash, people with zero liquid cash panic. They are forced to sell their assets at catastrophic losses just to survive. But when you hold $10,000 in liquid capital, a market crash is no longer a tragedy. It is the ultimate clearance sale. Having $10,000 ready to deploy allows you to step in when everyone else is terrified. You can purchase heavily undervalued high-quality stocks, fund a high-margin side business venture, buy discounted inventory, or take advantage of distressed real estate opportunities. Without capital, you are merely a helpless spectator watching economic cycles pass you by. With $10,000, you buy a ticket to sit at the table with active players, ready to capitalize on market inefficiencies. Reaching your first $10,000 is going to demand discipline, consistency, and a willingness to ignore short-term temptations. But I promise you, it is the single most important financial hurdle you will ever clear in your lifetime. Once you break through that wall, momentum completely takes over and building the next milestone becomes exponentially easier. If you are currently fighting your way through the valley of death, do not quit. Stop looking at daily noise. Focus on building sustainable daily financial habits, and let time do the heavy lifting. If you found value in this breakdown and want more strategic guides on mastering money, building real wealth, and navigating the economy in 2026, hit that subscribe button right now, drop a like on this video, and let me know in the comments. What is your current target milestone? Let's build real, undeniable wealth together.